Hi everyone, I am Bhagya, Diploma Final Year student from VET BVL Polytechnic, and I introducing my classmates Radhika, Rakshita, Bharat and Surya. We are representing a model on GST. GST means Goods and Service Tax. Goods and Service Tax is an indirect tax levied on the supply of goods and services. It is a nation-wide tax seeking to unify several indirect taxes, and it's based on the principle one nation, one tax. Basically, there are two types of tax, that is direct tax and indirect tax. Indirect tax classify into two types, that is central GST and state GST, in which central GST and state GST are the part of intrastate transaction, which means within a state. Now there are some taxes which are merged in GST: excess duty, custom duty, service tax, central tax, luxury tax, value added tax, entertainment tax, purchase tax, entry tax and lottery tax. Now let's about GST rate structure. In 0% we include all the essential items like milk, bread, fruits and vegetables, etc. In 5% we include all the common use items like tea, coffee, domestics, etc. In 12% we include all the standard rate items like dry fruits, ghee, butter, snacks, meat and fish, etc. And under 18% we include maximum goods and services plus standard rate items, mineral items, branded garments, soap, ice creams, etc. Under 28% we include all the luxury items and tobacco like car, motorcycle, chocolates, pan masala, etc. And now I will explain previous and current taxation system. So let's start with previous taxation system. Let's take an example. Here we are assuming our universal tax rate 10%. Suppose manufacturer purchase a raw material for rupees 50 and added his profit 50 and total cost will be 100, and he will have to pay tax on 10% on 100 rupees. The tax will be 10 rupees and final price is 110. It will be forwarded to wholesaler, then he will add his profit 10 rupees and total cost will be 120, and he will have to pay a tax on 120, that will be 12 rupees and final price will be 132. It will be forwarded to retailer and he added his profit plus expenditure 10 rupees and total cost will be 142, and he will have to pay a tax on 142, that will be 14.2, and final price will be 156 to reach consumer. After GST, let's take the same example. Suppose manufacturer purchase a raw material for rupees 50 and he added his profit 50 and total cost will be 100, and he will have to pay a tax on 50 rupees, that will be 5 rupees and total final price is 105. It will forward it to wholesaler and he added his profit 10 rupees and total cost will be 105, and he will have to pay a tax on 10 rupees, that will be 1 rupees and final price is 116 rupees. It will forward it to retailer and he added his profit 10 rupees and total price is 126, and will have to pay a tax on 10 rupees, that will be 1 rupees and total final price reached to consumer 127 rupees. Now we can conclude that before GST that goods was available to consumer 156.20. After GST same goods available to consumer at 127. So you must notice that before GST pay a tax on tax, that is called cost carrying effect. In current taxation system our cost carrying effect will removed by GST. Thank you one and all, and special thanks to our HOD Veena Kumari to encouraging